Hello, my dear students. Hope you guys are all doing good. Hope you're all perfectly fine. And I do wish and expect that your preparation is going good. Now, in this video, I'm going to explain or we are going to do a detailed analysis of the RTP which has been released for May 2023 attempt. So what is the main agenda of this video? So I thought of making a separate video explaining you or taking you through the RTP for the May 2023 attempt. So as you could see, I have downloaded the RTP for the paper 6 for the May 2023 attempt. So and in this video, we are going to cover what kind of questions are tested, especially case scenario based MCQs, what kind of questions are tested and how to interpret the questions in the exam also, that feel you will get it. So that's why I'm doing this video. So without any delay further, let us continue understanding this RTP related content. So first they have given some academic update, and if you ask me, this is not such any academic update. This they have covered even in in November 22 attempt related RTP also. So whatever academic update they have given here, the same academic update they have given even in November 22 RTP also. But anyhow, I will take you through this quickly. So first, one academic update whatever they have given is relating to section 53 of the Companies Act. And section 53 of the Companies Act is actually talking about issue of shares at a discount. So this section 53 extract they have given here. So this is basically why section 53 will be relevant for us, why law related section will be relevant for the auditors. This is forming part of audit of items of the financial statements. So if they ask you the question as an auditor, how would you verify the shares which are issued at a discount? This particular thing you are supposed to write here. So let us see what the section 53 of the Companies Act say regarding issue of shares at a discount. First, straight away, section 53 of the Act says that the company shall not issue shares at a discount. What the Act has told directly, the company shall not issue shares at a discount. No company shall issue the shares at discount, except in the case of issue of sweat equity shares. If you want to give sweat equity shares at a discount, that you can do it, except in the case of sweat equity shares, the shares shall not be issued at discount. This is what the subsection 1 of section 53 says very clearly. So what does the Act say? The company shall not issue shares at a discount except when the shares are issued as sweat equity shares. And also any shares which are issued by a company at a discounted price will be considered as void, except in the shares issued as sweat equity shares. In all other cases, even though if the company has issued the shares at a discount, in other cases other than sweat equity shares, that will be completely void. That issue of shares will not have any kind of legal validity. The shareholders will not get any kind of rights on that shares. So the shares issued at a discounted price will be completely void. Next one, notwithstanding anything contained in subsection 1 and 2. That means ignoring this content in subsection 1 and 2. Now they are adding one more condition. Let us see what is that. Subsection 1 says, except in the case of sweat equity shares, you can't issue shares at a discount. Subsection 2 says, you can issue, if you issue the shares at a discount, that will be completely void. Now they have added one more subsection, subsection 2a they have added. In that they are saying that now ignore whatever we have told in subsection 1 and 2 and let us see what the subsection 2a says. So notwithstanding anything contained in subsection 1 and 2, a company may issue shares at a discount. In one case, now they are giving one exception kind of thing you can say. First they have told it is void. Now they are giving one exception. In case the company wants to give issue shares at a discount, they can do it in one case. What is that case? Sweat equity shares we know. In addition to that, one more case they are saying here. What is that? A company may issue shares at a discount to its creditors when its debt is converted into shares in pursuance of any statutory resolution plan or debt structuring scheme in accordance with any guidelines or directions or regulations specified by RBI under the RBI Act 1934 or the Banking Regulation Act 1949. So now what they are trying to say here is, sometimes some banks or financial institutions or some companies, they have a very bad financial position. They will take the loans, but they will not be in a position to repay the loan. Sometimes it happens. Some company has taken loan, but its financial position has become very bad. They are unable to repay the loan. In that case, RBI will pass a order. What order? They will order some scheme with the name either statutory resolution plan or debt restructuring plan. With this name, they will announce a scheme. In that scheme, RBI will ask that respective company whose financial position has become very bad. Assume we will discuss with the help of example. Some company X Limited, they have taken some 1,000 crore rupees of loan from banks. Assume now this 1,000 crore rupees of loan they have taken from the bank, but they are unable to repay that loan. Now RBI has came out with a scheme, debt restructuring scheme they have ordered. In that order, RBI mentioned that this company shall convert this 1,000 crore rupees of loan, whatever they have taken, into debentures, into shares. The RBI might pass an order that this company, whatever loan they have taken, since they are unable to repay, the RBI might order that in compensation for the repayment of the loan, they might order to issue the shares to this respective bank. If such a, as a part of that scheme, as a part of that statutory resolution plan or debt restructuring scheme announced by RBI, as a part of that scheme, if this company has to issue the shares as a repayment of the loan, then those shares can be issued at discount. That can become valid only in this case. One is sweat equity shares and the other one as a part of statutory resolution plan or as a part of debt restructuring plan announced by RBI. In that case, the company can issue shares at a discount to its creditors when the debt has been converted into shares. Now this company has been ordered by the RBI to convert this 1,000 crores of loan into shares. Now in the part of that conversion, those shares can be issued at discount. That could happen. Understood? So the final summary is, in only two cases the shares are permitted to be converted, the shares are permitted to be issued at discount. Number one, in case of sweat equity shares. Number two, when the debt is getting converted into shares as a part of statutory resolution plan or debt restructuring plan announced by RBI. In these two cases only, shares can be issued at discount. In all other cases, it will become void. Clear? So this is what section 53 says. Now, ignoring these provisions, if some company fails to comply with the above provisions, that means except in the two cases, except in the issue of sweat equity shares or as a part of restructuring plan announced by RBI, in these two cases, the company is permitted to issue shares at a discount. But if some company is issuing shares at a discount, in other cases also, as we all know, that will become void. In addition to that, penalties also will be there. What are that penalties? Let us see. Where any company fails to comply with the provisions of this section, that means if they fail to comply with any of these three subsections, then such company and every officer in default, the company which has made that mistake and every officer who is in default, they shall be liable to pay a penalty. How much penalty? Which may extend to an amount equal to amount raised through the issue of shares at a discount. How much penalty company or every officer in default should pay? They should pay a penalty which may extend up to whatever amount that you have raised through that issue of shares at a discount, that amount, or 5 lakh rupees, whichever is less. Assume the company has raised the money of some 2 lakh rupees by issuing shares at a discount. So the company should pay a penalty of either 2 lakh rupees or 5 lakh rupees, whichever is lower. Which one will be lower? 2 lakhs will be lower. Or assume if a company has raised 10 lakh rupees of money by issuing shares at a discount. Now penalty will be 10 lakh rupees or 5 lakh rupees, whichever is lower, 5 lakh rupees. So they have to pay penalty which should be equal to either amount raised through the issue of shares at a discount or 5 lakh rupees, whichever is less. In addition to that, the company shall also liable to refund all monies received with interest at the rate of 12% per annum. Not just paying penalty, whatever money they have raised from that shareholders by issuing shares at a discount, that money should be refunded back along with interest at the rate of 12% per annum from the date of issue of such shares till the date of refunding. So for that duration, at the rate of 12% per annum, the company should refund all the money. Understood? So penalty also they have to pay. In addition to that, whatever money that has been raised by way of issue of shares at a discount, that money has to be refunded back along with 12% interest per annum from the date of issue of such shares till the date the money has been refunded. Clear? This is what section 53 of the Companies Act say regarding issue of shares at a discount. Now, what auditor needs to check? If you are conducting audit of share capital of some company, what points you are supposed to check? Let us see. The movements in the share capital during the year, you have to verify, and whether there is any issue. As an auditor, if you are verifying, if you are conducting audit of some company's financial statements, obviously you have to obtain evidence regarding share capital also. So first thing what you need to check is there any movement in the share capital? How to know it? So very simple. Take opening balance, take closing balance of share capital. Assume opening balance is 100 crore rupees, closing balance is also 100 crore. Okay, there is no new issue during the year. Or assume that opening balance was 100 crores, closing balance was 110 crores. Now it is clear that there is an increase in the share capital by 10 crore rupees during the year. So find out first the movement in the share capital and also analyze whether there is any new issue of share capital happened during the year. He should verify that the company has not issued any of its shares at a discount by reading the minutes of the meetings of its directors and shareholders authorizing issue of share capital and the issue price. So whatever this issue increase in new capital happened, I need to make sure that this new shares have not been issued at a discount. How you will come to know whether the shares are issued at a discount or not? The procedure also they are telling here by reading the minutes of the meeting of the directors, that is the board of directors minutes and also shareholders minutes. If you read it, then you will come to know at what price the shares are issued. So make sure that this new issue has not been done out of discount issue of shares at a discount. Further, the auditor should also verify that whether the company has issued shares at a discount to its creditors when its debt is converted into shares in pursuance of any statutory resolution plan or debt restructuring scheme in accordance with guidelines. If at all, if you came to know that there is an increase in the share capital and that share capital has been increased because of issue of shares at a discount, then I should find out, is that issue of shares at discount, is it because of sweat equity share or is it because of conversion of debt into shares as per restructuring plan announced by RBI? If it is because of two reasons, okay. If it is not because of any of these two reasons, which two reasons? If it is not because of sweat equity shares, if it is not because of conversion of debt into shares, then the auditor should give a modified opinion on that matter. Clear, everybody? So this is what auditor needs to check. In simple lines, if I have to put it out, we need to check compliance with the provisions of section 53 of the Companies Act. That's it. Clear? So this is what one academic update which has been given regarding issue of shares at a discount. See, one more academic update also they have given relating to company audit chapter when it comes to section 147 of the Companies Act. So section 147 of the Companies Act is actually the section talking about penalty related matters. As we have seen in the company audit chapter, there are so many sections of the Companies Act talking about how to do a company audit. Section 139, appointment of auditors. Section 140, which is talking about remuneration and other, casual vacancy, all these related matters. Section 141, qualification, disqualification. So like this, as we all know, in so many there are so many sections of the Companies Act which are talking about appointment, qualification, disqualification, procedural formalities. If any of the sections of the Companies Act relating to company audit, if they are violated, then section 147 has prescribed some penalty related matters. Section 147 of the Companies Act is exclusively talking about penalty in case if any of the sections of section 139 till 146, if these sections are violated, what penalty the company or auditor has to pay, that section 147 is talking. Understood? So section 147 is penalty related section. So what will be the amount of penalty, sir? That amount of penalty, I have created a summary here. Let me try to explain what will be the penalty on the company if they violate the provisions of the Companies Act relating to company audit. What will be the penalty on the auditor if he violates the provisions of Companies Act relating to company audit. Let us see. See, whatever text which has been there here that I have tried to summarize here for our easy understanding, let us try to understand. So in case if the company has violated any of the provisions relating to Companies Act, that means they did not appoint the auditor properly within the limited time, they did not fill the casual vacancy as per the procedures prescribed under Companies Act, they have removed the auditor without following the procedure. So like that, if the company is violating the provisions of the Companies Act, then the company will be punishable with fine. On the company, there will be a penalty. How much penalty? On the company, minimum penalty will be 25,000, maximum penalty it can go up to 5 lakh rupees. This penalty is on what? Entire company. In addition to that, every officer who is in default, like whichever officer has committed the default, like a board of director or CEO, CFO, some officer will be there, no, who would have committed default. So that officer in default, he will also have a separate penalty. He will pay a penalty of minimum 10,000, which may go up to maximum 1 lakh rupees. So the penalty on the company will be minimum 25,000, which can go up to 5 lakh rupees. Whereas in addition to that, every officer who is responsible for that mistake, he shall pay extra penalty, and the penalty on officer in default will be minimum 10,000 rupees, which can go up to a maximum of 1 lakh rupees. Clear? This is what the penalty on the company. In case if the auditor himself violates the provision, company did not make any non-compliance, auditor himself has violated some provisions, like he performed section 144 services, or he did not follow some mandatory filings with the government. So these kind of violations, if he has done, if auditor has done the violation, if the violation done is unintentional, by mistake if some non-compliance happened, then the auditor will pay a fine, that is penalty of minimum 25,000 rupees, but it can go up to the maximum of 5 lakh rupees or 4 times of auditor's remuneration, whichever is less. That will be maximum penalty. So minimum penalty will be how much? 25,000 in case because of unintentional mistake. By mistake if non-compliance happened, minimum 25,000, which can go up to a maximum of either 5 lakh rupees or 4 times of auditor's remuneration. Assume auditor's remuneration is 1 lakh. What will be the maximum penalty because of unintentional mistake on auditor? 5 lakh rupees or 4 times of remuneration. 4 into 1, 4 lakh rupees, whichever is lower. Maximum penalty can go up to 4 lakh rupees. Clear? In case if the auditor has violated the provisions intentionally, willfully, to cheat either shareholder, to cheat either management, to cheat either statutory authorities or tax authorities. So if intentionally, with the intention to cheat willfully or to commit a fraudulently convey some information to shareholders or management or regulatory authorities, if intentionally auditor has done any violation, then he will have to undergo imprisonment, which may extend up to 1 year. If you have committed unintentional mistake, there will be no imprisonment, only penalty. But in case if it is a intentional mistake, intentional non-compliance, you have to undergo imprisonment up to 1 year. In addition to that, you have to even pay penalty also. In this case, minimum penalty will be 50,000 rupees, but here maximum penalty can go up to 25 lakh rupees or 8 times of remuneration of the auditor. How many times of remuneration? 8 times of remuneration. When? If it is intentional. So if it is intentional, 2 punishments will be there. One is imprisonment, which can go up to 1 year. In addition to that, auditor shall pay penalty. Minimum penalty will be 50,000. Maximum it can go up to 25 lakh rupees or 8 times of the auditor's remuneration, whichever is lower. See, in addition to these penalties, both in intentional as well as unintentional, in both the cases, after going through this punishment, in addition to that, the auditor shall refund his remuneration back to the company, whatever remuneration. In addition to the penalty I am talking. In addition to your penalty, you have to refund the remuneration back to the company. In addition to that, because of your mistakes, if someone has suffered damages, if someone has suffered some loss, that loss also you have to compensate for. That loss also you have to compensate. So these penalties you have to undergo. In addition to that penalties, imprisonment, you have to refund back the remuneration, whatever you have received. In addition to that, even you shall pay the damages, whatever the people have suffered because of your mistakes. Clear? So this will be the penalty which auditor and the company has to go through as per section 147 for violating the provisions of the Companies Act. Understood? So this is what regarding academic update. So with this we are done with the academic update. Now let us have a look at the questions which were tested in the RTP. So first we will cover case scenario based MCQs. Please pay complete attention what they are trying to say here. See, case scenarios particularly I am very specific here. Why I have decided to explain RTP is exclusively to make you familiar how the case scenario based MCQs will be asked in the examination and how to interpret it. So that is what my main focus. So that's why I have taken up this video to explain this RTP. The main agenda is to bring before you this case scenario based MCQs. So we'll talk about case scenario number 1, what they are talking here. Kaur and Associates, a sole proprietor firm of Simran Kaur, is offered appointment as auditor of a company engaged in the manufacturing of automobile components for the first time. So it is an initial audit engagement. Why? Because they are clearly saying she is appointed as auditor for the first time. So there is an audit firm, sole proprietor firm, Kaur and Associates. Engagement partner is Simran Kaur. They have been appointed as auditor of one company which was engaged in manufacturing sector. And what they are manufacturing? Automobile components they are manufacturing. She is fact checking about integrity of the promoters. She is checking whether the promoters are honest people or not, and also whether the key managerial persons are honest people or not. Matters such as competence of staff to perform the engagement activities are also considered by her, and the appointment is then accepted. See, as we have covered in our classroom discussion, before we accept, we will perform some preliminary engagement activities. What preliminary engagement activities will perform? 4 activities will come under preliminary engagement activities. Number 1, checking integrity of the management and those charged with governance. Number 2, checking the competence of the engagement team members. Number 3, checking the compliance with ethical requirements. Number 4, checking any significant matters which have arisen during the course of previous audit assignments. So as we know, SA 300 says these 4 are preliminary engagement activities. That's what they are saying here. So before accepting the audit, what the auditor has done, she checked the integrity of the promoters, and also she is checking competence of staff, whether their staff are capable to complete the audit assignment. So she is basically performing here preliminary engagement activities, and after that she has accepted the audit. Next one, she is also talking into account number and locations of branches of the company, requirements of Schedule 3 of the Companies Act, and expected time by which audit has to be completed, keeping in view the statutory requirements. So as we all know, once we have accepted the audit, the next step is what? Establishing audit strategy. And whenever we are establishing audit strategy, we will not decide the strategy in a fluke. While deciding strategy, we'll consider various factors. What are they? Number and location of branches. How many number of branches we have to do the audit? How many locations we have to do the audit? What is applicable financial reporting framework? What is the time limit within which we have to complete the audit? So all these factors will be considered to establish audit strategy. So this particular auditor, Simran Kaur, she is considering factors to establish the audit strategy. Next, initially she thought it proper to inquire key employees of the company in procurement and marketing departments, and also planned for the same. That means first she thought of the first procedure which she thought of doing is to go and inquire with the key people in the organization. In addition to that, she also planned to visit 3 plants of the company. Nothing but she also planned for plant visit. Nothing but what she is doing, by doing inquiry with the top level management and also by visiting the client's premises, what she is trying to do? She is trying to obtain understanding of entity, environment and its internal control. This procedures only we call it as what? Risk assessment procedure. So first she performed preliminary engagement activities, then she established audit strategy, then she performed risk assessment procedures. Why? Because inquiring with the key managerial person, visiting the plants, all these are nothing but what? All these are nothing but risk assessment procedures. Next one, the purpose of planned inquiry and visit is to identify and assess risk of material misstatement. One more hint they are giving. Why she is doing inquiry and visiting the premises? To identify and assess risk of material misstatement. In which procedures we identify and assess the risk of material misstatement? As we all are aware, in the risk assessment procedures. So she is performing risk assessment procedure. Next, a detailed instructions has been prepared by her office and it has been handed over to assistants in engagement team. What is the document which will contain detailed set of instructions which are required to be carried out by the staff? Is it audit strategy, audit plan or audit program? Which one will contain details of instructions along with verification techniques? Audit program. So she has prepared audit program and gave it to assistants. These set of instructions include details of extent of checking, nature of audit procedures to be performed regarding purchases, sales, items of income, items of expenditure. Nothing but she has prepared the audit program and that audit program covers all these matters. During the course of execution of above set of instructions, it has been brought to her notice that the company is also producing substantial quantities of scrap generated during manufacturing process. As a part of that audit, they have realized that the company along with its main product, they are even generating some scrap also. However, no instructions have been given to engagement team in this regard. But what actually happened is this scrap was nowhere included as a part of audit program. There is no instruction in the audit program to verify the scrap. So this is what the facts of the case study. Now out of this case study, we have to answer the below mentioned questions. Let us see how far we'll be able to answer. First one, question number 1. Auditor is fact checking about the promoters and key managerial person. She is also considering competence of the staff to perform engagement. What is she trying to do? I've already told you in the first paragraph, as we have seen, she is trying to understand integrity of the promoters. She is also checking competence of the staff. So which activity she is trying to perform? Preliminary engagement activity she is trying to perform. That is the answer. So what is she trying to do? She is trying to do preliminary engagement activities. So which one is the correct option? Option A, they are saying she is establishing audit strategy. No. She is conducting preliminary engagement activities. Yes. She is designing audit plan. No. Then what is the last one? She is checking her compliance of ethical requirements. No. Why? Because this checking of competence and checking the integrity of the promoters, this is a part of preliminary engagement activity. So option B will be the correct option. Now coming to second question. Consideration of number and location of branches, requirement of financial reporting framework, and time of completion are relevant factors for establishing what? For establishing which one? Audit strategy. So as we have discussed in the case study itself, we consider number of locations, requirements of applicable financial reporting framework, time for completion of the audit. All these are part of what? Establishing audit strategy. So which one will be correct option? Option B. Why? Because option B contains the answer overall audit strategy. Next one. Taking into account the description of planned inquiry and visit, which of the following is true? So as we have seen, after establishing strategy, she has planned to inquire key persons in the organization, and she has even planned to visit the premises to identify and assess risk of material misstatement. Yes or no? So they are asking in this context, they have given 4 statements. Which one is true? We have to find it out. Let us see. Planned inquiry and visit fall in the area of audit strategy. No, that doesn't fall in audit strategy. Planned inquiry and visit are planned as risk assessment procedure and fall in the audit plan. Do you agree with that? Yes. Why? Because when we do the inquiry, when we visit the premises, and even in the question they have clearly told that she is planning and visiting to identify and assess risk of material misstatement. So that will form part of what? Risk assessment procedures. So option B is the correct option. Anyhow, let us see the remaining 2 options also. The said description is not related to audit planning. It is wrong. It is wrong statement. Planned inquiry and visit fall in scope of audit program. No, it will form part of risk assessment procedure. Next one. What is detailed set of instructions given to assistants in engagement team known as? What do we call the detailed instructions given to the engagement team? We call it as audit program. So option C is the correct option. Next one. Last question. The issue of generation of scrap has been overlooked in detailed set of instructions given to engagement team. As we have seen while understanding that particular case scenario, in that they have clearly told that the company is producing scrap, but that was not included in the audit program. So that's what they are saying. The issue of generation of scrap has been overlooked in detailed set of instructions given to engagement team. What should be the proper course of action? See, you have ignored verification of sale of scrap, but later you realized what engagement partner should do. She should update the audit program now to include even verification of scrap related activities also. So updating the audit program will be the correct course of action. So that's what they are saying. She should ignore this information as audit has already begun. She should ignore altogether since it was included, since that point was excluded and audit was already started. You will not make any change, you will ignore. No, that you will not do. She should modify earlier set of instruction. Yes, this is correct option. Whatever instructions which are already given, you need to update it. Even we have seen in the audit strategy planning and program, audit program needs to be reviewed and updated as and when necessary to keep it up to date. So she should modify earlier set of instructions. This will be the correct option. Anyhow, let us see what they are trying to say. Other options also. She should leave the matter to wisdom of engagement team. Will you leave it to the choice of engagement team? No. Being an engagement partner, it is your responsibility to update the audit program. She should put the ball in the court of management as she was not provided with complete information earlier. That means she has to pass on the responsibility to the management. Can you simply shift the blame onto management? No. Since now you have come to know about it, it is your responsibility to modify the instructions. You can't simply pass on the blame to management. Clear? So this is what case scenario number 1. Hope you all have understood this. So main agenda is to make you familiar with this case scenario kind of questions. So I hope so everybody have understood the case scenario and also explanation to the questions and answers out of that case scenario. Clear everybody? Let us now have a look at case scenario 2. So let me read out the contents of the case scenario, then we will talk about the questions. So CA Rajan Pillai is heading the engagement team conducting audit of a company. So nothing but what they try to say here is CA Rajan Pillai is an engagement partner. While audit is in progress, consider following issues regarding audit documentation. When it comes to audit documentation, they have put before some issues here. What are they? Audit program was prepared, assigning responsibilities for different types of works to be performed by team members. So a detailed audit program was given. In that audit program, it was mentioned who should do which work. The engagement team consists of 4 members: Mohit, who is a CA final student; Rohit, CA final student; Shobit, paid CA; and CA Rajan Pillai, who is an engagement partner. So total engagement team contains 4 people. Next one. The team has determined materiality for the financial statements as a whole. Even they have decided what is material, what is not material. The team assessed risk of material misstatement to be low. They performed risk assessment procedures and they have come to a conclusion that the risk is very low in the given client. CA Shobit is responsible for attending inventory count process and putting down its documentation part. So CA Shobit, he is not CA actually, yeah, he's a paid CA. So Shobit, one of the engagement team member, he has been given the responsibility to go and attend the inventory counting process done by the management and also maintain the documentation of that. During the course of audit, many related party transactions have come to the notice. So these are the observations. Now regarding these issues, some questions they are asking, let us have a look at them. So on the basis of above, answer the following questions. What are they? Work relating to verification of revenue was assigned to Mohit in audit program. So as per audit program, revenue verification work was given to Mohit. However, it is being performed by Rohit. The work was given to Mohit, but who actually performed it? Rohit performed it. Verification of trade receivables was planned to be carried out by Rohit. In the audit program, trade receivables verification was given to Rohit. However, it was performed by CA Rajan Pillai due to last minute practical issues. Sometimes things don't go as expected. So in the last minute, because of some practical issues, some work which was assigned to one person was performed by another person. Like revenue was assigned to Mohit, but it was verified by Rohit. Trade receivables was verified to Rohit, but it was verified by engagement partner CA Rajan Pillai. So because of last minute practical issues, so work was divided. However, which of the following statements is most appropriate in this regard to audit documentation? Since one person's work was performed by another person, is this required to be included in the part of documentation or no need to include it? It has to be included. Why? Because in the audit program, you have assigned the work to somebody else. But because of last minute issues, work was performed by somebody else. So whatever changes that have taken place in the audit program, that need to form part of documentation. So let us see what are the options they are giving here. Audit program contains names of works and work to be performed. It is immaterial whether work assigned to one person is performed by another person. Do you think it is immaterial? Who performed which work? We need not bother about it. We need to be bothered. We need to include it as a part of documentation. So option A is wrong. Audit program was already prepared. Only persons assigned specific responsibilities can perform those duties. The audit program is so rigid. That means once you have decided the program, no matter whatever happens, everybody has to follow the same? No. Sometimes practical issues might come across, because of which work assigned to one person might be handled by another person. So you can't say program has to be followed strictly. Sometimes it is not practically possible. So B is also not correct. It is necessary that audit program should be suitably updated, or notes are given in working papers to this effect, so that planned duties are in accordance with actual work performance. Since the change has happened in the practical work, so what needs to be done? Audit program has to be updated, and all the relevant notes regarding the changes in the audit program should also be documented. So option C is the correct option. Let us see what option D they are saying. Changes in the audit program or notes clarifying the matter are required only when a person not forming part of engagement team is deputed. Do you think so? Are you required to change the documentation, or are you required to change audit program only when someone outside the engagement team has done the work? No. Even within the engagement team also, if any changes have happened, even that changes also required to be included in audit program. So option C is the correct option. Option D is also a wrong option only. So option C will be the correct answer. Next one. As regards materiality, which of the following statements is most appropriate in the context of audit documentation? Regarding documentation of materiality, they are giving some options. We need to choose the correct option. What are they? Materiality has already been determined. There is no need to put it into working papers. Is there no need to document materiality? No, we have to document it. So option A is wrong. Option B, materiality depends upon professional judgment of auditor. Whatever amount has been determined can be documented in working papers. So yes, materiality depends on professional judgment, but whatever amount that you have determined as material, that has to be included in working papers. Agreed. But they are saying what amount has been determined can be documented, not just the amount of materiality, along with what factors has been considered, that should be documented, not the amount of materiality. What factors you have kept in mind while deciding materiality, that is what exactly needs to be documented as per SA 320. So but in point B, they are just saying whatever amount you have determined, only that amount you have to mention. No, what factors have been considered, that also needs to be documented. So let us see option C now. Materiality arrived on basis of professional judgment, along with what factors you have considered in the determination, that has to be documented. Yes, option C is the correct option. What materiality that you have arrived on the basis of professional judgment, along with that what factors you have considered in determining materiality, all these things need to be documented, not just amount of materiality. Next one, materiality has been arrived upon professional judgment. It also depends on professional judgment whether he wants to document it or not. That means it's a choice given to the auditor to decide. If he decides like documenting, he will document it. If he doesn't decide like documenting it, he will not document it. So does that mean is the choice given to the auditor? No, he has to document it along with the factors. So option C will be the correct option. Next one, as regards team's assessment that risk of material misstatement is low, which of the following statements is odd one relating to documentation of risk? That means risk is very low. Now they are asking in the options given here, one statement is inappropriate. What is that statement? We need to find it out. Let us see the statements first. Discussion among engagement team members and details of significant decisions has to be documented. Yes, option A is appropriate only. Details of risk assessment procedures have to be documented. Yes, B is also appropriate. Details about how understanding of each component of internal control was obtained, that also has to be documented. Yes, you have to do that also. Precise calculation of risk of material misstatement has to be documented. This statement is inappropriate. Why? Because as we have seen in the risk assessment and internal control chapter, the assessment of risk is purely a matter of professional judgment, not a matter capable of precise calculation. We can't exactly calculate the risk. We can only estimate it. But option D, what they are saying, whatever precise calculation of risk is there has to be documented. First of all, you can't precisely calculate the risk at all. You can only estimate it using professional judgment. When precise calculation of the risk itself is not possible, how can you document it? Not possible, no. So option D is the odd one. Option D is the inappropriate option. Why? Because we can't precisely calculate the risk at all. Then how can we document it? Clear? So that is what the second question's answer. Option D is the correct answer. Next one. Let us now talk about the next question, fourth question out of this case scenario. So what is this fourth question about? CA Shobit is responsible for attending physical inventory count of the company. So as we have seen, CA Shobit, one of the engagement team member, what is the responsibility given to him? He has to go and attend the physical inventory counting done by management. Which of the following is usually not true in this regard relating to audit documentation? As a part of this inventory's physical verification, they have given a few statements. Out of that, we have to find out which one is not true, which statement is not true regarding audit documentation of inventory's physical verification. Let us see. Dates on which physical inventory count process was attended by him should be documented. Obviously, the date on which physical verification has been conducted, is that date needs to be documented or not? Yes. It may also include photographs of that date showing his attendance of the inventory counting process at a particular location as a part of that audit documentation. For extra evidence, if you want, even you can attach a photograph also as a part of your documentation. Yes, A is true only. Details of test accounting undertaken should form part of audit documentation. See, when you go and attend physical verification, as per SA 501, you can perform test accounting also. Now, what test accounting you have performed, that details also you have to store it as a part of documentation. Yes, obviously, that also should form part of documentation. So, A is true, B is true. Details of obsolete goods found should form part of audit documentation. Yes, as a part of the stock verification, which particular stock is obsolete. Obsolete means what? Damaged, inferior quality. So as a part of physical verification, if you find any obsolete stock, even the details of that obsolete stock also should form part of documentation. Number 4, reports showing that stock conforms to quality control standards in accordance with law are essential part of documentation. This is actually wrong. See, as a part of audit documentation, you need not even include whether the stock which your company is holding, whether it is as per quality control standards of the law. That is not required. Let me give you an example for this. Assume that you are conducting audit of some company which is engaged in the food business. So now, as a part of food business, as per FCA related norms and regulations, some food is required to be packed in a airtight, in a zero air packaging. So they will completely take out the air and pack that material. This is a requirement of FCI now. So now when I go to physical verification of this particular company, which is engaged in food business, I will just check what is the stock. How much quantity is there? Is it inferior? Is it not inferior? Is it at normal quality? So all these things I will verify. Here I will not be concerned whether the stock is packed in that airtight packaging. That is something as per law. That doesn't affect my inventory verification. If I go to inventory verification, I will verify whatever quantity which was stated in the books. That much quantity is there or not? That quantity is in proper condition or not? Is it obsolete or is in good condition? That I will verify. Whether quality control standards as per law. See, this item should be packed in some safe packaging. That I need not get concerned. That is something company's headache when it comes to business. When I go for physical verification, I am not concerned to check whether the stock is conforming to quality control standards as per law. That is something which company will do at the time of sale. I am least bothered when I am going for physical verification. So whether the stock conforms to quality control standards in accordance with the law are essential part of audit documentation. That statement is false. As per law quality control standards, I need not check it as a part of my physical inventory verification. If I need not check it, obviously that will not form part of my audit documentation also. So option D is the incorrect option. Whereas A, B and C, all these three things will form part of documentation. Option D will not form part of documentation. Next one. As regards related party transactions, which of the following should not be part of audit documentation? They're asking, as a part of related party transactions, you need to include some information as a part of your audit documentation. Which of the following option need not form part of documentation? Let us see. Management representation letter in this regard, obviously this should form part of documentation. Whatever representations you are getting from the management, that should go to my audit documentation. Related party transaction policy of the company, what policy the company is having regarding related party transactions, that should go and sit in my documentation. Documentation to show that such transactions are at arm's length basis. Whatever transactions which are happening with the related party transaction, they should happen at arm's length basis. So that arm's length basis of calculation of price also should form part of my documentation. Documentation to show that transactions are at close length basis. This close length basis is irrelevant thing. We will check whether the transaction is at arm's length price. Arm's length price means what? Whatever price that you are charging from an unrelated party, the same price should be charged from a related party also. Whether the transactions are at arm's length price or not, that we will check it. We have nothing to do with the close length prices. Why? Because wherever we have seen always related party transactions, we will check arm's length only, not close length basis. So option D does not form part of documentation, whereas option C, A and B, all these three will form part of documentation. Clear? Why? Because when it comes to related party transactions, we are concerned with arm's length price, not the close length price. Clear? With this 2 case scenarios we have completed. Now we have some general MCQs. Let us have a look at them quickly. Very simple questions only. The term drawing power is associated with which of the following facilities as sanctioned by the bank? Drawing power for which loans we calculate? Cash credit loans we calculate. So which one is the correct option? Option D. So why? Because a drawing power is a term associated with short-term working capital loans like cash credit. So drawing power is associated with cash credit. Number 2. What aims at ascertaining that expenditure incurred has been on the purpose for which the grant and appropriation has been provided, and the total amount of expenditure does not exceed the appropriation made. Whatever expenditure that has been made, that is within the amount provided for. The amount does not go, the actual expenditure will not go beyond the amounts provided for. This aspect of government audit, what we call it? Audit against the provision of funds, we call it. So as we have seen, audit against rules and orders, audit of sanctions, audit against provision of funds, proprietary audit, performance audit. Out of all that 5 options, which one is fitting for the given question? Option A. Audit against the provision of funds. Audit against provision of funds means what? In government, for every expenditure, there will be a limit set. There will be certain amount which is appropriated. Nothing but, if I put it in simple words, budget will be there. Whether actual expenditure which is incurred, that is within the amount appropriated, that is within the limits which was sanctioned or not, that we need to check it. So checking whether expenditure does not exceed the appropriation made within the allocated amount, within the amount of funds provided for. So that we call it as audit against the provision of funds. So option A will be the correct option. Next one, which of the following is not correct? So they are giving some options. We have to find out the incorrect option. AS18 dealing about related party transactions, yes. AS10 PPE, yes. AS28 impairment of assets, yes. AS16 intangible assets, this is wrong. Why? Because AS26 is talking about intangible assets, not AS16. So D is the incorrect option. Next question. Tools and techniques that auditor use in applying the principles of data analytics are known as. Whatever tools and techniques which auditor is using while doing audit, that we call it as what? Computer assisted audit techniques. This we have seen in audit in an automated environment. Whatever tools and techniques which are used by the auditor for obtaining audit evidence, nothing but the data analytics tools which are used by the auditor, they will be called as what? Computer assisted audit techniques, not computer aided audit techniques, not computer aided audit tools, not computer accounting and audit technique. All these 3 are wrong. Option D is the correct option. Next one. What refers to events or conditions that indicate an incentive or pressure to commit a fraud or provide an opportunity to commit a fraud? What these factors are called as per SA 240? We call them as fraud risk factors. So the given question is regarding definition of fraud risk factors. As we have seen in the chapter fraud and responsibilities of auditor, fraud risk factors refers to events or conditions that indicate an incentive or pressure to commit a fraud or provide an opportunity to commit a fraud, or even they indicate an attitude for committing a fraud. So that's why option A is the correct option. That is a definition for fraud risk factors. Clear? Next one. So with this, MCQs are over. Now let us have a look at descriptive questions. In that also, first we will concentrate on true or false kind of questions. Very simple questions only. Let us have a look at it. So according to SA 315, the objective of the auditor is to identify and assess risk of material misstatement, whether due to fraud, only at assertion level. Do you think this statement is true? No. False. Why it is false? Why? Because as per SA 315, while performing risk assessment procedure, we need to identify and assess risk of material misstatement both at assertion level as well as financial statement level also. But in the question they are saying auditor should identify risk only at assertion level, but SA 315 says you have to identify risk at 2 levels, at the financial statement level and also at the assertion level. So that's why the given statement will be false. The risk will be identified at financial statement level also. Next one. Control environment can prevent, detect and correct a misstatement. See, as we all know, internal controls contain 5 components, which are control environment. Then we have entities risk assessment, information system including business process, control activities and monitoring. See, to prevent, detect or correct a misstatement, we need to have all the 5 components in place. Control environment alone will not be able to prevent, detect or correct a misstatement. Control environment means creating a good culture of honesty and ethical behavior. That is one of the basic component. But just by establishing good culture of honesty and ethical behavior in the organization, altogether frauds and errors can't be prevented or detected. So control environment is an important component but control environment alone will not be enough to prevent, detect and correct a misstatement. We need all other components also to make sure that misstatements are prevented, detected and corrected. Control environment alone will not be enough. So that's why the given statement will be false here. Next one. While auditing the books of accounts of XYZ Limited, the auditor of the company looked at the inventory counting process to obtain audit evidence. In this present case, audit procedure used by the auditor is inspection. Do you agree with that? If you sit and observe the inventory counting done by the management, what do you call the technique as? Not inspection. We call it as observation. We call it as what? Observation. So in the present case, the technique used by the auditor is observation, not inspection. Inspection is documentary examination or physical examination of an asset. If you are looking at the process being performed by others, that is observation, not inspection. So this is also false. Next, when inventory is under the custody and control of a third party, is material to the financial statements, the auditor can obtain sufficient appropriate audit evidence regarding existence and condition of the inventory by taking written representation from the management. See, this question is from SA 501. See, when inventory is in the custody of a third party, how do you obtain audit evidence? By getting external confirmation from that third party, not just by getting written representation. Why? Because as we know, SA 580 says written representation alone cannot be considered as audit evidence. And especially SA 501 says when inventory is in the custody of third party, the auditor should obtain sufficient and appropriate audit evidence by getting external confirmation, not by written representation. So this statement is also false. Next. Assertions refers to representations by the auditor to consider different types of potential misstatements they occur. See, here itself you should have found it out. They are saying assertions refers to representations made by auditor. No. Why? Because the definition of assertion means representations made by management regarding items of financial statements. Assertion doesn't mean representations made by auditor. Assertions means representations made by management. So that's why this statement is also false. Next one. As per SA 200, overall objectives of the auditor. In conducting an audit of financial statements, the objective of the auditor is to obtain absolute assurance about whether the financial statements as a whole are free from material misstatements. Basic question, no? Are you required to obtain absolute assurance as per SA 200? No. Why? Because SA 200 says we need to obtain only reasonable assurance. And in fact, we cannot obtain absolute assurance. Why? Because the process of auditing is suffering from some inherent limitations. So in the question, they are saying auditor shall obtain absolute assurance, which is obviously wrong. The auditor should obtain only reasonable assurance. That is what SA 200 is expecting from the auditor. Next one. Once overall audit has been established, the audit plan can be developed to address various matters identified in the overall audit strategy. The establishment of audit strategy and detailed audit plan are closely interrelated. Do you agree with this statement? Yes. But in fact, the question contains some printing mistake. Once the overall audit strategy, this is missing. But overall, this statement is true only. Overall, this statement is what? True. Why? Because first we will develop overall audit strategy. On the basis of that audit strategy, we can develop audit plan. And as we know that audit strategy and audit plan are not some two discrete phases of audit. They are interrelated with each other. They are closely interrelated with each other. So the given statement is true. So first auditor will establish strategy. On that basis, we will develop audit plan. These are not discrete phases of audit. It is rather a continual and iterative process, and both are closely interrelated with each other. So this statement is true. Next one. Teaming and lading is one of the techniques of inflating cash payments. Do you agree with that? No. Why? Because teaming and lading is one of the technique for suppressing the cash receipts, not for inflating the cash payments. Teaming and lading is one of the technique for what? Suppressing cash receipts, not for inflating cash payments. What do you mean by teaming and lading? If you remember, one debtor will come and pay the money to the cashier. Cashier will misappropriate it. In order to hide that, amount received from another customer will be recorded in the first customer's account. Subsequently, amount received from third customer will be recorded in the second customer's account. So this technique we call it as teaming and lading. And in fact, teaming and lading is one of the technique for suppressing the cash receipts, not for inflating cash payments. So that's why this is also false. So these are true or false statements, very simple and easy true or false statements. Now let us have a look at complete descriptive questions, what they are trying to say here. Starting with nature, objective and scope of audit. Professional integrity and independence are considered essential characteristics of all the professionals. There are two interlinked perspectives of independence of auditors. One is independence of mind and independence of appearance. Explain. Straight away question. They are asking you to explain the concept of independence. And also, as we know, independence will be of two types: independence of mind and independence of appearance. So independence of mind means it is an agreement of mind to act independently. Independence of appearance means you should not be related with the client in any manner which can make the independence to get compromised. So straight away question, they're asking you to explain in a detailed manner independence of mind and independence of appearance. No indirect question, straightforward question. Next one. The chartered accountant has a responsibility to remain independent by taking into account the context in which they practice. The threats to independence are taking into context in which they practice, the threats to independence, and also the safeguards available to eliminate them. Explain the guiding principles in the above context. Nothing but they are asking you what are the safeguards to protect the independence of the auditor. So we have a question given in our material in the nature, objective and scope of audit. If you observe regarding independence, we have one question in which we have given a few safeguards. Like if I take you through that question. Yes. Just a minute, guys. Yeah. The safeguards to independence. This is what they are talking about. So what are the safeguards to independence? Very simply, if I have to put it, as we have seen while understanding, before accepting the audit itself, just a minute, let me zoom out. Yeah. Before accepting the audit itself, we need to decide whether there is any threat to independence. If you are able to eliminate it, then accept it. If you are unable to eliminate it, don't accept the audit itself. After accepting, if you come across any threat to independence, then also, if possible, try to eliminate it. If you are unable to eliminate it, then withdraw from the audit altogether. So this particular paragraph you are supposed to write, safeguards to independence. Next one. Now let us come back to the RTP. Next question. The actions of the engagement partner and appropriate messages to other members of the engagement team in taking responsibility for overall quality on each audit engagement emphasize the importance of audit quality. Explain with reference to SA 220. As we have seen in this chapter, standards on auditing, SA 220, quality control in an audit of financial statements. So in that first point, auditors, engagement partners shall take the leadership responsibility to maintain the quality of audit. And as a part of that, taking the leadership responsibility by way of your actions, by way of your communications, you should highlight how important it is to do the audit as per professional standards and legal and regulatory requirements, how important it is to do the audit as per quality control policies and procedures, and you have to create a favorable environment where people will come and ask their concerns without any fear of reprisal. And also you should highlight how important to maintain the quality is. So first point in SA 220, leadership responsibility for quality control, that you are supposed to write here. Next one. An audit is distinct from investigation. However, see this question, third question 3A, you will not be able to find it in nature, objective and scope of audit. This I have given in our material as a part of standards on auditing. Next, an audit is distinct from investigation. However, it is quite possible that sometimes investigation results from prima facie findings of the auditor. Straightforward question, we have added this in our material. Nothing but how investigation is different from audit. Audit and investigation both are different actually. So they are asking you to explain how audit and investigation differ from each other. So a few points if I have to quickly revise how audit and investigation differ from each other. Just let me show you that question once, then we will proceed further. Yeah, this is what the question I am talking about. An audit is distinct from investigation. So very simple, audit is a general purpose assignment. We do it every year irrespective of the fact whether frauds are noticed or not. But investigation is a special purpose assignment. We do it only when we suspect something is very bad with the company. And in fact speaking, investigation is an absolute assurance, audit is a reasonable assurance. And most of the times it will happen that in audit you will have findings, that findings will require the management to order for investigation. So like this, a brief you have to write here. Next. Now coming to audit strategy, planning and program. SA 300 states that auditor should plan his work to enable him to conduct an effective audit in efficient and effective timely manner. What matters should be covered in such plan? What are the activities which you have to include in the plan? So very simple, in your plan you should allocate the time for risk assessment procedures. You should allocate the time for determining reliance on internal controls, nothing but compliance procedures. You should allocate some time for substantive audit procedures. Even you should allocate some time for coordination of the work that has been performed. Straight away question from the material. Next one. In establishing the overall audit strategy, the auditor shall identify characteristics of the engagement that define its scope. What characteristics you will try to understand? See, they're not asking what all factors you will consider in establishment of audit strategy. They're only asking you about only one factor. So like if I take you to that question, so in our material, if you have a look at it in the audit strategy planning and program, we'll be able to find this. So let me take you through that. Yeah, in this chapter. So the first question itself. See, this is the question. In this question, we have seen that there are 5 factors which auditor should consider in establishing audit strategy. They are not asking about all the factors. They are only asking about this factor. So as an auditor, you need to consider characteristics of the engagement. What particularly you will try to understand regarding characteristics of the engagement. That is what the question is about. So what we will try to understand regarding characteristics of the engagement, these 3 examples you are supposed to write, nothing else. Like you need to cover expected audit coverage, number and location of the components, what business segments you have to verify, and previous audit evidence, how far that is available. So this is what you need to write, not the entire answer here. They are only asking you what characteristics you will understand. For that they are asking examples. Just you have to write this point. That's all. No need to write the other remaining 4 factors. Just write the first factor along with this examples. That's it. So you have to be very careful while reading the question. Why? Because you have to write the suitable answer. But what most of the people will do the mistake here is they will understand this question as what factors to be considered in establishing overall audit strategy. They ignore the examples and write the entire 5 points, but that is not what they are asking. They are just asking you this first point along with example. So be careful when you are reading the questions in the exam. Next one, audit documentation and audit evidence. Let us see what they are saying. Mrs. Summer Amar and Associates are the statutory auditors of Ganga Limited for the financial year 2020-21. Very good. CA Summer is the engagement partner for such assignment. While discussing with the engagement team, CA Summer briefed his team that the auditor shall assemble the audit documentation in an audit file and complete the administrative process of assembling the final audit file on a timely basis after the auditor's report. SQC requires firms to establish policies and procedures for retention of engagement documentation. Explain. What is this question talking about, guys? This question is asking you to write about assembly of final audit file and also retention of final audit file. As we know, as per SQC1, within 60 days you have to complete the assembly process. That does not involve any new audit procedures. It involves only administrative work. And once audit file has been assembled, we have to retain it. We should not delete or discard it. For what duration we have to retain it? For a period of 7 years from the date of auditor's reports or the group's audit report, whichever is later. So this in a detailed manner you have to write about assembly and retention of final audit file. Clear? Straight question. Next one. Essay 230, audit documentation, deals with the auditor's responsibility to prepare audit documentation for an audit of financial statements. Such documentation serves various purposes. Explain. They're asking you what are the advantages of audit documentation. Like if you maintain documentation, that will help you for the next year's audit. It will act as evidence in the court of law. You can betterly supervise your engagement team members' work. It will enable both internal reviews as well as external reviews. Straight question from the material, advantages or purpose of audit documentation. Next one. Suraj and Associates are the statutory auditors of Yuvraj Limited for the financial year 2021. During the course of audit, CA Suraj, the engagement partner, requested the management of the company to provide written representation with respect to valuation of transaction. The management, however, did not provide the same to CA Suraj. What course of action CA Suraj should follow in this case? This question is from essay 580, written representation. In that also we will have one paragraph there, management's refusal to provide written representation. That paragraph you are supposed to write. So what that paragraph says in brief, first you have to go and ask the management reasons, reevaluate the integrity of the management, and even try to consider modifying the opinion. So like this, you need to write that paragraph from that essay 580, what the auditor should do in case management refuses to provide written representation. See, that refuses to provide written representation will contain only 3-4 points. In order to make the answer lengthy, what you can do is first write the meaning of written representation, then write what auditor should do in case if the management refuses the auditor to give the written representation. That two you write, that will be suffice. Next one. Explain the various factors affecting the auditor's judgment as to sufficiency of audit evidence. Straight away question. As we know, sufficiency is a measure of quantity of audit evidence, and what amounts to sufficiency, that depends on some factors. Like some examples of the factors are: it depends on risk of material misstatement, effectiveness of internal controls, size and characteristics of the organization, characteristics of the population. It also depends on materiality. That is what you are supposed to write: factors which affects the sufficiency of audit evidence. Next, what is the objective of the auditor with respect to opening balances when conducting an initial audit engagement as per SA, as per relevant SA? This question is from SA 510, and directly they are asking you what are the objectives of auditor as per SA 510. From SA 510, first paragraph you are supposed to write. So what you have to write? So as per SA 510, the auditor is required to obtain sufficient and appropriate audit evidence whether opening balances contain a misstatement that could affect the current year's closing balances, and also whatever accounting policies that are reflected in the opening balances, whether they are consistently applied in the current year. If at all they have been changed because of valid reason, whether that change has been appropriately presented and disclosed in the financial statements. So from SA 510, you have to go to that standard. From there, you have to pick the objective paragraph and write it as it is. Understood? Next one. Ninth question. It has been suggested that, now the risk assessment and internal control related questions. It has been suggested that actual operation of internal control should be tested by the application of procedural test and examination in depth. Explain with the help of example in respect of procedure for sales. Same question we have in our material in the chapter risk assessment and internal control. Let me take you through that chapter. So let me go to that section number. Page number, sorry. So which page it contains? Audit risk assessment 126. Let me go to page number 126. There I will show you this. Yeah. Sorry, it's 127. So here in this page, in this chapter, same exact question we have. Let me take you through that. Yes, same question. So it has been suggested that actual operation of internal control should be tested by application of procedural test and also examination in depth. Explain with the help of example. So nothing but whether control is functioning effectively or not, that you can do it, that you can know it by performing procedural test. Now what is the meaning of procedural test? Very simple. Whatever procedures which are laid down by the management, whether those procedures are complied with or not, checking that is only procedural test. Now they are asking you to give example for procedure of sales. What procedure will be followed for sales? First, before you accept the order, first you have to check the status of the stock. If you have enough of stock, you have to give confirmation. If you don't have stock, reply back to the customer that we will deliver the stock by so and so date. Now, once you have given the commitment to the customer, now you have to forward that slip to the production section. Now the production section will keep the stock ready by the respective date. On the respective date, you have to dispatch the stock. If it is a credit sale, on the due date, you have to collect the money. This is what a simple procedure for sales. So this question we have as it is given in our material. You can refer from there. Next one. Next question is straightforward question. What are limitations of internal control? As we know, internal controls, no matter how effective they are, they can also provide only reasonable assurance. They can't provide absolute assurance. Why? Because internal controls are also suffering from some inherent limitations. What are that inherent limitations? Human error in decision making. Collusion among the people, collusion among those people who are required to implement internal control, lack of understanding among the people who are required to implement internal control, cost exceeding benefits, and also some limitations in case of smaller organizations. So straight away question, you can answer it. Next, the division of internal controls into 5 components provide a useful framework for auditor to consider how different aspects of entities' internal control may affect audit. Mention those components of internal control. They are saying internal control establishment will have 5 components. They are asking you what are that 5 components. In the previous MCQ only I have told, in one of the MCQ I have mentioned. So there are, in one of the true or false statements I have mentioned, there are 5 components of internal control. What are they? Control environment, entities risk assessment, information system including related business process, control activities, and finally the last one, monitoring of the controls. So just that 5 steps, 5 components you have to write, nothing else. Just write that 5 side headings, that's all, you will get the full marks. Next, now the remaining questions are from fraud and responsibilities of auditor. Let us see question number 11 now. Detection of manipulation of accounts with a view to presenting a false state of affairs is a task requiring greater tact and intelligence. So they are saying that in order to detect the manipulation of accounts, you need to have greater intelligence. What is the other name for manipulation of accounts? We also call it as fraudulent financial reporting. So to detect fraudulent financial reporting, we require greater tact and intelligence. Explain clearly stating the objective behind this type of fraud. They're indirectly asking you, what is the objective behind this type of fraud? If I indirectly put it, why fraudulent financial reporting will be committed? That is what their question. What is the objective behind fraudulent financial reporting, or why fraudulent financial reporting will be committed? Both will be same, no? So in the material, they have given us 4 purposes. What are they? To avoid the incidence of taxation, to declare dividends when there are insufficient profits, to withhold the declaration of dividend when there are sufficient profits, or when the managerial remuneration is linked with the profits of the company. That 4 points you have to write. So indirectly, they are asking why fraudulent financial reporting will be committed. Next one. In an audit of financial statements of PQR Limited, CA Vikas Khemka finds that the cash receipts have been suppressed. Explain techniques which may lead to him suspect this. Nothing but indirectly they are asking what are the techniques for suppression of receipts. What are the techniques for suppression of receipts? In the material, we have a question called defalcation of cash. In that defalcation of cash, 2 headings will be there. One is inflating cash payments. Other one is suppressing cash receipts. In the suppressing cash receipts, there will be certain points that you are supposed to write. Like teaming and lading you have to write, or not accounting for cash sales, not accounting for miscellaneous income. This kind of things you have to write here. Techniques for suppressing the cash receipts you are supposed to write. Next, talking about audit in an automated environment. First question is straight question. They're asking you some definitions. What is the definition of computer assisted audit techniques? What is the definition of data analytics? What is the definition of database, information system, privileged access? So all these definitions we have given in the material. First of all, the computer assisted audit techniques. In one of the MCQs also we have seen the tools and techniques used by the auditor while doing audit, that we call it as CA. It is data analytics, nothing but the tools and techniques which are used to tap vast amounts of data to make meaningful conclusion out of it, that we call it as data analytics. Database, a repository of all the data, that we call it as database. Information system, just other name for automated environment, the combination of hardware, software, networks, this combinedly we call it as information system. Privileged access, a person getting access beyond his purpose, beyond his requirements. If someone is getting access beyond his requirements, that we call it as a privileged access or super access. So that definitions you have to write here. Next one. The auditor's responsibility includes reporting on internal financial controls over financial reporting, which includes an understanding IT environment of the company and relevant risk and control. First, they have given one statement that, as we know, as per 143 subsection 3, auditor is required to report on internal financial controls. So in order to report on that internal financial controls, we need to have an understanding of IT environment. Okay, this is a statement, but what is the question? Mention the situation where IT will be relevant to the audit. See, statement is something, question is something else. In the statement, they are saying you need to obtain understanding of environment. But the question which they are asking is why IT will be relevant in audit. Question number 2 from audit in an automated environment. Why IT will be relevant in audit? Why? Because today there is high-tech nature of businesses and the volume of the transactions is increasing. And if you use the technology in your audit, you will be benefited. You can complete the work in less time. Complexity of the transactions is increasing. So this is what you need to write here. Question number 2 from the chapter audit in an automated environment. Why IT will be relevant in audit? So please be careful. Like this, sometimes they might ask you some different statement and the question will be altogether different. So in the statement here, they are saying understanding of IT environment, but the question which they are asking is why IT will be relevant in the audit. Clear? So relevance of IT in the audit, we are supposed to write the answer here. Next, random selection ensures that all items in the population or within each stratum have an equal chance of selection. Random sampling includes 2 very popular methods. What are they? Simple random sampling, stratified random sampling. We need to explain about what is simple random sampling, what is stratified random sampling. In simple random sampling, we make use of random number tables or random number generators. In stratified random sampling, we divide the entire population into subpopulation. Then once again, we make use of random number tables and generators. That's what you have to explain in a detailed manner. Next one. While planning the audit of S Limited, you wanted to apply sampling techniques. What are the risk factors you have to keep in mind? Nothing but they are asking you to write about sampling risk. So as we have seen one dedicated question, sampling risk. What is the meaning of sampling risk? In simple terms, selecting an inappropriate sample. or even there is a textbook definition for the sampling risk, the risk that the conclusions of the auditor will be different if the entire population is subjected to same audit procedures. And we have seen that this sampling risk will have impact on test of controls also, it will have an impact on test of details also. In case of test of controls, risk of over reliance, risk of under reliance. In case of test of details, risk of incorrect acceptance, risk of incorrect rejection. So that sampling risk related question you have to write here. So if they ask you what are the risk factors related to sampling, or if they ask you what is sampling risk and its impact, everything remains the same. You have to write about sampling risk and its impact on test of details and test of controls. Now coming to next chapter, analytical procedures. If analytical procedures are performed in accordance with SA 520, if you identify fluctuations or relationships that are inconsistent with other relevant information or that differ from significant values, the auditor shall investigate such differences. Obviously, if we perform analytical procedures, if we get any deviations or fluctuations, we need to investigate. How you will investigate, you have to explain. How you will investigate? We will go and inquire with the management. If the management does not give enough of responses, we perform alternative audit procedures. If alternative audit procedures are also not possible, we will modify the opinion. Very simple question. That is what you are supposed to write. Next one, while applying substantive analytical procedures, what techniques can be used by the auditor of a company to obtain sufficient and appropriate audit evidence? Nothing but techniques for performing analytical procedures. How many techniques are there? 4 techniques. What are they? Trend analysis, ratio analysis, reasonableness test, structural modeling. So all these 4 techniques you are supposed to write here. Now coming to the next chapter, audit of items of financial statements. Let us see what they are saying. While verifying PPA of the client entity, the auditor also needs to consider whether PPA has been valued properly and as per the generally accepted accounting principles and practices. Explain. So they are asking you how to conduct audit of PPE. In that PPE also they are only asking about valuation assertion, whether they have been valued or not. How PPE will be valued? Costless accumulated depreciation. When it comes to depreciation, various methods are there. The client should choose such a method which is reflecting the appropriate consumption pattern of the machinery, and also we need to do the recalculations and all. So in the PPE also you need to write that only valuation assertion. Next, what are the disclosure requirements for cash and cash equivalents to be made by the company? They are not asking you audit procedures, but in fact they are asking how the cash should be disclosed in the financial statements. Disclosure requirements, schedule 3 question. This is the question related to schedule 3. How we have to disclose cash and cash equivalents? Let me show you that once. Disclosure requirements. In the recent times the importance is increasing. They are very frequently asking about disclosure requirements than audit procedures. So here we have disclosure requirements. So cash and cash equivalents should be divided into 4 categories. What is the balance from the banks? Separately that we have to show. Checks and drafts on hand separately, cash on hand and others. And similarly, what are earmarked balances? Like unpaid dividend, that is a earmarked fund. That means for specific purpose we have kept that. So like that, if you have any balances for specific purposes, that has to be stated separately. Balances with the other banks which has held as margin money. Margin money means at short notice we give the money to others. We don't mention any repayment period. At whatever time we ask, the other bank will give us the loan. So if you have any bank balances as margin money, that amount should be separately disclosed. Repatriation restrictions. If there are any restrictions on the cash and bank balances, repatriation, amount lying in the foreign banks, there will be some restrictions for withdrawal. So like that, if there are any repatriation restrictions, that need to be stated separately. And bank deposits which are having more than 12 months of maturity, that should be disclosed separately. So these are the disclosure requirements as per Schedule 3 for cash and cash equivalents. Next one. CA Saurabh is a statutory auditor of UVW Limited for the financial year 2021. While verifying purchases made by UVW Limited, CA Saurabh decided to perform analytical procedures to obtain audit evidence regarding reasonableness of purchase quantity and quality. So nothing but they're asking you to write what analytical procedures you will try to perform regarding purchases. 4 they will say in the answer: consumption analysis, and also composition analysis you have to do, ratio analysis you have to do, and even you have to do quantitative reconciliation. That 4 you have to write here. Now talking about company audit chapter, XYZ Limited removed its statutory auditor by passing a resolution in the meeting of board of directors for his removal without obtaining approval of the central government. Such removal was made before the expiry of the term of auditor. Give your comments in this regard. Is this removal valid? No. Why? Because it did not follow procedure. What is the procedure for removal? First, board of directors shall pass a board resolution. Application should be made to central government in ADT2. If the central government gives approval, within 60 days within 60 days shareholders meeting has to be conducted. In that shareholders meeting, even special resolution will be required. And in the given question they told only board of directors resolution is there. Central government approval is not there. So that's why this removal will be invalid. Clear? Next one. Yes, Private Limited has a paid up capital of 49 crores from borrowings from banks, and also they are having a share capital. Sorry. Yes, Private Limited has a paid up capital of 49 crores and they have a borrowings of 99 crores. The audit firm P and Company was appointed as statutory auditors of the company for one term of 6 consecutive years. Is this appointment valid? Or for this company is the rotation applicable? Yes. Why? Because this is question regarding applicability of rotation. For a private company, the rotation will become applicable if either their borrowings are greater than or equal to 50 crores, or if their borrowings are also either their paid up capital or borrowings. If any of that have exceeded 50 crores, then rotation will become applicable. In the given case, paid up capital is 49 only, but borrowings are 99 crores which have exceeded the limit of 50, so rotation becomes applicable. Since rotation is becoming applicable, an individual can't be appointed for more than one term of 5 consecutive years, but in the question they are saying the auditor has been appointed for 6 consecutive years, appointment will be invalid. Why? Because for this company rotation becomes applicable. Why? Because the borrowings has exceeded the limit of 50 crore. Since rotation is applicable, the auditor can be appointed for only one term of 5 consecutive years. He can't be appointed. But in the given case, the appointment is made for one term of 6 consecutive years, which is violation of rotation concept. So the appointment will be invalid. And the question they are asking is rotation applicable? Yes, rotation is applicable because condition regarding borrowings has been satisfied. Next one. The recommendations for appointment of auditors is one of the several functions performed by audit committee. Discuss the other key responsibilities of audit committee. As per section 177, what are the audit committee's responsibilities? The list of responsibilities you have to write here. Like they will select the auditor, they will decide the remuneration, they will check whether auditor is doing the work properly or not, they will check the independence of the auditor, they will review the financial statements, they will give approval of related party transactions. So like that list of responsibilities, whatever are there in the company audit chapter, that you have to write here. Next chapter, audit report. The description of management responsibilities in the auditor's report includes reference to management responsibilities, and as it helps to explain the users on the premise on which an audit is conducted. Explain. So they are asking you to explain about what are management responsibilities. What you are supposed to write? You have to explain about what are management responsibilities. You have to write here. So what will be the management responsibilities, guys? So as we have seen in the SA 700, in this paragraph, what will come? So you have to say management is responsible for preparation of financial statements. Management is responsible for implementation of internal controls. They are responsible for making an assessment regarding going concern. Even you need to identify those who are responsible for oversight of financial reporting process. So that 4 points you have to write here. Let us have a look at the next question now. Question number 25. In considering the qualitative aspects of entities' accounting practices, the auditor may become aware of possible bias in the management judgments. The auditor may conclude that lack of neutrality together with uncorrected misstatements causes the financial statements to be materially misstated. Explain and analyze indicators of lack of neutrality with examples. Nothing but this question is also from SA 700, and specifically they are asking you about qualitative aspects. So in SA 700, as we have seen, while conducting the audit, the auditor needs to do two kinds of evaluation. One is qualitative aspects evaluation and the other one is specific evaluations. So now the question is all about this qualitative aspects evaluation. So, and even they are asking you indicators of lack of neutrality. So in that qualitative aspects, they say while conducting audit, you might come to know about bias in the management's accounting estimates. You might find lack of neutrality, like selective correction of misstatements. Management is rectifying only those misstatements which increase the profit, but they are not rectifying those misstatements which decreases the profit. Or the management is inappropriately changing the accounting policies without any valid reason, or they are making wrong accounting estimates. So these are a few examples of indicators of lack of neutrality or bias in the management's decisions. So this is what question number 25 is about. Now let us talk about the next chapter, which is bank audit. Explain the audit approach you would follow to check the operating expenses of the bank. They're asking you, how do you verify operating expenses? And if you remember from the bank audit chapter discussion regarding operating expenses, only three things we will check. Number one, wherever possible, we will try to check the supporting documents like invoices and bills. And also we need to check whether internal controls are working effectively in all that areas, and wherever suitable, we'll try to perform analytical procedures. Wherever predictability exists, wherever relationship between the items exist, there we will try to perform analytical procedures. So these three are the things, these three are the ways by which we verify operating expenses of a bank. That's all. Now talking about next question, Mr. Rishikesh, the bank manager, develops controls to assist in managing key business and financial risk. Discuss the various requirements of effective risk management system. They're asking you what are the various requirements for effective risk management system. So like if you remember, in order to have a good or effective risk management system, it need to have 5 characteristics. Like that risk management system should involve approval of the top level management, like those charged with governance. Entity should do a risk assessment. There should be control activities. Monitoring also should be there. And finally, there should be reliable information systems. So these 5 are the components to call a risk management system of a bank to be effective. More or less very similar to components in the internal control. So but they say with the different names. Number 1, participation by those charged with governance. Entities risk assessment. Then we have control activities, monitoring. These 3 points are common. They are adding 2 more points. At the beginning they say participation by those charged with governance. At the end they say reliable information systems. So these 5 are effective components to call the bank's risk management system to be effective. Now talking about different types of entities audit. The audit of government expenditure is one of the major components of government audit. Explain briefly the basic standards set in relation to audit of government expenditure. They're asking you how do you verify government expenditure. As we know, 5 aspects will be there for verifying government expenditure. What are the 5 aspects? The 5 aspects are going to be audit against rules and regulations, audit of sanctions, audit against provision of funds, proprietary audit, performance audit. That 5 aspects you are supposed to write here. And then finally, what are the important objectives of local body audit? If you are conducting audit of a local body, what will be your important objectives? So 5 objectives will be there. We have to comment on true and fair view of financial statements, strengths and weaknesses of internal controls, adherence to legal or regulatory requirements, whether value is received on money being spent. And also one more thing, last item will be there. I actually forgot it. So let us have a look at the material. So let me take you through the government audit. So, audit of various entities. This chapter will have it. So 4 items I'm able to remember. Just one thing, I'm not able to recollect it. Yeah, so these are the 5 objectives. As I was saying, we have to comment on fairness of the content and presentation of financial statements, strengths and weaknesses of internal control, adherence to legal or regulatory requirements, whether value is being received on money spent, and finally detection and prevention of error, fraud and misuse of the resources. So these are the objectives in conducting audit of a local body. So this is what the entire RTP is all about. I hope this video will be helpful for you, and all the very best for your exam, guys. And if you find this video informative, please do subscribe to our channel. Please share our channel with others, and also like and comment on this video. Thank you so much, guys. Bye.